This monthly top dividend stock to buy video will be different. Visa has been my top dividend stock to buy all year long, so there's no change there. However, I will elaborate on why Visa is ranked as my top dividend stock using 3 out of the 6 factors I consider in my investing framework. I believe all investors should have a framework when evaluating investments, even if mine is not the one you're using. As you can see from all the books behind me, I like to do a lot of reading. I searched far and wide for an investing framework I can use confidently, and when I couldn't find one, I created my own. So looking at Visa from this perspective, you'll understand why I have it ranked so highly. Let's take a look at the details.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
Zooming out a little bit, looking at Visa's 2024 performance, you can see a volatile year for this payment processing company. Of course, in recent days, the company is under investigation by the government, suggesting it has too much market power, and that's brought the stock price down considerably. Now, I released a video about those developments, which I will link to at the end of this one, if you're interested in the potential impacts of that investigation. One pushback I usually get about Visa as a dividend stock is that the dividend yield is not large. And so dividend stock investors tell me, why would I buy Visa with a smaller dividend yield if I can get another dividend stock with a much higher dividend yield, maybe 5, 10, 15. You can even find dividend stocks yielding 20%. But I caution investors when looking at those types of dividend stocks, because you're exposed to the total return of a dividend stock, meaning not just the dividend yield, but also the share price return. And so you have 2 factors to consider. Also, if you're investing in a dividend stock, you're hopefully a long-term investor. And if you're holding a dividend stock for 5, 10, 20, 30 years, what is interesting, and what's interesting for me, is the potential for dividend increases, dividend per share increases over time. And with Visa, you have a strong outcome, a strong potential for increases in dividend per share. At $2 per share in the trailing 12-month period, that's up from around 50 cents per share in dividends for Visa 10 years ago. So in 10 years, Visa has quadrupled its dividend per share. And so I wouldn't be surprised if there's similar increases in its dividend per share over the next 10, 20, and 30-year periods because of how dominant Visa is. In fact, Visa is so dominant that the government is putting it under investigation for being too powerful. All right, so Visa's revenue has jumped to $35 billion in the most recent trailing 12-month period, and that's up from around $22 billion in 2019. And here I'll state one of my factors in my 6-step framework for evaluating stocks, and that is the customer value proposition. Visa offers customers a significant convenience advantage. It also offers safety. It also offers speed. You can take your Visa card instead of carrying cash, and that's a lot safer for many consumers. You don't have to fear that you're going to get robbed if you're carrying, let's say, $2,000 or $3,000 in your pockets when you're going to make a big purchase. Even smaller purchases, you don't want to carry a couple of $100s in your pocket because you're at risk of getting robbed. Theft is a growing concern for many parts of the world, especially in large cities like Los Angeles, where I'm located. Now, another advantage that Visa offers customers is convenience. Imagine you go into a store and you buy something and your total order is $64.25 or 26 cents. Now, imagine going through your wallet and paying for that. How are you going to pay? Are you going to give exactly $64.26? That's going to require searching, and you're going to take time going through your money and your change and all of that. Or you're going to pay, let's say, $70 and wait for the cashier to count and give you your change. Overall, that transaction is going to take more of your time and be more of a hassle than if you just pay with your card, right? You instantly pay the exact amount and you're on your way, versus trying to count out the exact change, making sure you're not making a mistake, like giving the cashier a $100 bill instead of a $10 bill. making sure when you get your change that it's accurate and putting it all back in your wallet, putting it in, carrying your bags. It's a whole inconvenience issue, right? Visa solves that. And that's a great customer advantage. And for customers, there is no fee for having a Visa card, right? You're not paying to have a Visa card. Visas will send you, in fact, they'll give you rewards for using Visa cards in most cases, depending on the issuer, etc., right? And then on the other side of the equation, it's also incredibly convenient. If you're a business and you're dealing with the same issue, of course you'd like to have the speed of your customer using a Visa card where you can get a customer on and moving forward with their order instead of all that time it takes for the precise change to be calculated and given, right? And so you prefer that as well. And then the security advantage, your cashiers are not dealing with as much cash and the chances of theft are decreased, or the losses from theft are decreased. Now, the businesses are the ones that are paying the fees. It could be 3 to 5%, maybe a little bit more depending on the transaction size. So the businesses are paying a fee, and they might not be happy with the fee that they're paying, but they do get a lot in return for the fee that they're paying. Not only do they get that convenience advantage in that the speed of every customer transaction is increased and they can get through more customers in a day, they can serve more customers in a day versus cash payments. And then on top of that, they're also getting access to over 4 billion Visa cards. There's over 4 billion Visa cards issued worldwide. And so as a business, you're getting access to all those people that have a Visa card. So those are huge advantages you're getting in return for paying a percentage of a transaction. And so you're not paying for something unless a consumer comes and buys something from you. If a consumer doesn't buy anything from you, you don't pay any fees. So in conjunction with the customer value proposition, which for Visa is excellent, it's an excellent customer value proposition, I look at the unit economics, which is a second step in my 6-step investing framework. And for Visa, this is also excellent. This is top tier. Visa scores 10 out of 10 in my framework for unit economics. Its operating profit margin at 67% is among the best of any business you'll find. It's the best of any business that I follow. There's other businesses that have a higher profit margin operating, but those aren't ones that I follow. Out of the ones that I follow, Visa is the best. And then return on invested capital is also excellent at 32%. So Visa scores 10 out of 10 in this metric because I often say it's easy to offer an excellent customer value if you're willing to lose money on the bottom line indefinitely. But that's not a sustainable business. You can't offer a product that costs you $100 to create. You can't offer that for free and not get anything in return and expect to be around for a very long time. That's not a sustainable business model. That's more of a charity. That's not a business. You'll run out of money operating on that business model. But Visa, not only do they offer great customer value, but they generate strong profit margins. And so 10 out of 10 in this regard. And then finally, the third step in my 6-step framework is valuation. And it's one of the more important steps in my 6-step framework. Visa scores solidly in this regard. They're not as excellent here. The stock is not very cheap. It's trading at a forward price to earnings of close to 25. But it's not expensive either, so it doesn't get minus marks for this metric. It's neutral. It's a neutral valuation for a company like Visa. But I'd be willing to pay. In fact, I own Visa stock, by the way, just for transparency. I'm willing to pay a fair value for Visa stock because it's so excellent in all of the other regards in my 6-step investing framework. And most notably, the unit economics and customer value. I have Visa ranked very highly in this regard. So when looking at it from this perspective, you can understand why I have Visa ranked as my top dividend stock to buy, even though Visa's dividend yield is not very large. In fact, it's a skinny dividend yield. But I have high hopes that Visa's dividend per share will increase over the next 5 years, will increase over the next 10 years, and over the next 20 years. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.